What up guys, Jay Manchin here, and we're back with another video. Today we're going to be discussing how the Federal Reserve's easing cycle, which we may or may not be going into very soon, impacts the RWA narrative. I'm going to break down what the RWA narrative is, the different types of RWAs there are, provide a few examples, and then we'll discuss how the Fed will impact the narrative going into the end of 2024 and into 2025. Without further ado, let's jump right into it. What are RWAs? And I ain't talking about risk-weighted assets. I'm talking about real-world assets. RWAs are a subsector of the DeFi space in which the tokens on the platform represent a real-world asset. So that can be tangible or intangible. Examples include real estate, stocks, bonds, commodities, art, even carbon credits. And so any asset that exists off-chain in the real world could be considered a real-world asset, or RWA, if it is tokenized and put on the blockchain. And if you've watched any of our Know It Alls videos, you would know that the most common RWA right now are on-chain treasury bonds. That entails taking US treasury bonds, putting them on-chain, and allowing users to earn a yield just by holding them. And so investors in other countries and emerging markets who would normally not be able to participate in the US bond market, this would allow them to do so and earn that safe yield. Even BlackRock's Biddle Fund, which they seeded 100 million on Ethereum, what do you think they're using initially as their RWA? Well, treasury bonds. Although they have $10 trillion in assets, of course, they're not going to tokenize everything in one go. And of course, they're not going to start with their real estate immediately. The easiest, most obvious aspect that they can participate in terms of the DeFi space is tokenizing US treasuries, because they own so many. So if we look at the total value of US treasuries on the blockchain that are tokenized currently, we're looking at about 1.4 billion according to RWA.xyz. So you could imagine that there's still a ton of room for potential growth in the sector. Examples of other RWA protocols right now would be Goldfinch, Maple Finance, Centrifuge, Ondo Finance, Relio Network. Once again, we did videos breaking down all of these and their fundamental deep dives, and so you get a lot of value from them if you go watch them. If you haven't seen them yet, go check out the Know It Alls channel. And once again, it's a mixture of private credit, real estate, bonds, etc. So before we jump into how the Federal Reserve easing cycle impacts the RWA narrative, it's worth it to understand how banks operate, at least this one aspect, and that's net interest margin. And you can look at net interest margin as interest income for the banks. So specifically just interest. Effectively, it's the difference between their interest income and their interest expense. Now, why does that matter? Banks and institutions, they have a short-term interest rate or overnight rate that they pay to the Federal Reserve through the repo facility. And I made a video on the repo facility. Go back and watch it if you haven't. That rate that they pay is also heavily influenced by the Fed funds rate. And so the higher the rates in terms of the federal funds effective funds rate, the higher the cost of capital is in terms of the repo market. And the lower the Fed funds rate is, the lower the cost of capital is in the repo market. And so that means in a high interest rate environment like we are now, so if you go to get a mortgage right now, for example, you're going to be paying a couple points higher than the bank pays. And it's usually 1.5%, 2%. So easy numbers, if the Fed funds rate is 5%, you're gonna be paying 7% for a mortgage, which is pretty much where we are now. That's how they make their profit on said asset, whether it's cash, real estate, bonds, whatever it is. Moving on. Now for some time, we've been in a high interest rate environment, which rendered off-chain yields more attractive than on-chain yields for an extended period of time. But right now, even with the Federal Reserve potentially easing, we've seen that flip. And now you can earn a higher yield on your stable coins versus owning a US Treasury, for example. Now, let me ask you a question. Do you think that real estate, in terms of activity, meaning demand and increasing supply as well, and mortgage rates, do you think that they would benefit from a Fed easing cycle? The answer is yes. And so you can extrapolate that out to other yield-bearing assets. And what's the RWA narrative made up of? Mostly yield-bearing assets. So because the cost of capital will become cheaper, that means loans on-chain and off-chain, they'll start to perform better in terms of getting more activity. The value of said tokens would increase that are attached to that specific RWA type. And issuers of these RWAs, I guess in this case, centralized issuers, they would be able to profit more because their cost basis is less, which means they can charge you less, but still keep it at a point where they maintain a good little profit for themselves. And if they're passing on all of the yield to the user, that's even better. And so with the Fed going into the easing cycle, I would expect more institutions and more everyday folks as well to participate in these networks because the barrier to entry is lowered and they're able to earn higher yields at this point. And the value of the token will continue moving up. Simple as that. If it's a good project. If it's not, I can't speak for them. And so all in all, the Fed going into an easing cycle would just make the RWA narrative way more attractive than it was, let's say, a year ago, for example. That's why I've been heavy in my RWA bag to take advantage of this next cycle. And we know how important narratives are for markets. And this is one of those narratives that could potentially bring that institutional capital that the space has been looking for years outside of ETF products, for example. And so expect to see more RWA projects, expect to see more institutions wanting to participate in the space, probably by standing up funds of themselves, just like BlackRock, and following suit. And if you're an RWA holder, expect some nice gains going into 2025. Now, guys, comment below on what RWAs you're holding or interested in, or any RWA projects that you want me to discuss on this channel. Also, leave a like, leave a comment, and subscribe if you got value from this quick hitter. And if you feel so inclined, hit the link in the description for a free strategy session with us. And guys, as always, see you on the next one.